Hello and welcome to Energy Bridge Africa, the link to powering the continent with myself, Fifi Peters. In last week's episode, we explored Africa's energy landscape and the key challenges shaping the continent's future. Today, we shift our focus to a crucial topic, financing Africa's energy sector. With the majority of the population still without electricity and the global push for decarbonization accelerating, financing the continent's energy transition is no longer just an ambition, it is an economic and social necessity. But how do we fund this transition in a way that's inclusive, scalable, and tailored to Africa's unique challenges? Joining us today are leading voices in the energy space to unpack where the money is flowing, where the gaps still lie, and what it will take to finance a just and sustainable energy future. So, Kola, to bring you here and get your views, is money the issue when it does come to financing the energy landscape on the continent, or is it a matter of bankability, in your view?
Thank you very much, Fifi. Look, money is the issue. Africa, if you listen to the numbers are there and the gaps waiting to be filled. The situation is a simplified one because the natural resource to help activate that is also in abundance on the continent. But what's missing is the capital and patient capital that is ready to work in the medium to long term in actualizing this. But the reality of what's happened, the global decarbonization push, is actually putting African banks are now coming of age, and those are the people that's coming to the rescue. A lot of the global banks have drawn the line in the sand saying, we are not going to put more money into anything other than renewable. But African continent is blessed with so many natural resources that could help in the transition. An example is look at a country like Nigeria, 210 TCF of natural gas reserves in place, yet there's darkness in the country. So think about pouring adequate capital into energizing that transition fuel in gas processing, and pushing that through likes of West African gas pipeline. That would help fuel that sustained growth in the economies in the region. So those are the balancing that you see. But what we see, and we've seen showing itself, African financial institutions are coming of age. They've got the required types of balance sheets. Their single obligor limits, because of their capital base and structure, becoming bigger. So the exposure to this market could only be led by them meeting these opportunities and actualizing them.
Sure. Before we perhaps touch on why new money is perhaps not going into old energy sources as much as some argue is required right now, I would like to get your individual takes on one of the newest players and entities on the continent here in South Africa specifically, who have been mandated to essentially play their part in increasing energy security in this country, and that is the SNPC. Jan, I'm sure you would have read a headline or two around the launch. It's the newest state-owned entity in South Africa. It's formed as a result of a mix of assets from the likes of the Central Energy Fund, Petro SA, iGas. It's mandated to ensure that South Africa is no longer a net importer of oil and gas over time, something that will increase its security. Could I just get your initial take on such an entity right now in this current time?
I think these new initiatives, Fifi, are extremely important. And as Kola pointed out, it feels like there's a maturity coming into the market. There's more innovation in the market on the back, I think, of the success that we've seen in especially the South African sector. Also, lots of regulatory changes, more market-friendly climate. And I think this is feeding very well into new players. We're seeing new business models. Nedbank is supporting a number of those business models. There's the energy aggregators, which is really just middle players coming into the market, buying private energy and selling that to private clients on the back of being able to effectively transmit those electrons through a national grid. This is all really important stuff. and we can only welcome new initiatives to push this landscape even further, and hopefully, as I say, beyond the borders. I think there are success stories across the continent popping up, and hopefully this will lead into a much more coherent sort of response and investment climate going forward.
Kola, your thoughts? I mean, essentially what South Africa has done is create what you are probably familiar with in terms of your West African origins, the Nigeria National Petroleum Company. We've created a South African National Petroleum Company, and I would be interested in hearing your thoughts and your views on the newest entity here, just based on your experience of what has been achieved by the NNPC in the recent past.
What I have seen is commendable. What the South African government has done with this launch is a fantastic one. Why? You've got different sources of energy, and you've created a center force that would harness that, put that together to put it to work. If you look at the NNPC, the Nigerian National Petroleum Corporation, has dealt in every vertical sphere of the energy chain. So we're talking upstream, midstream, downstream. And they have become the facilitator and the integrator of major partnerships across the oil and gas value chain. And that's now seeing results. One of the key critical drivers is what this government in Nigeria has signed presidential orders that's helping to energize the oil and gas and the energy sector in making sure it's working and the workability is showing results across board. If South Africa, from what I see, is doing the same, this new formation would only help with transparency, energize a very active and creative energy market that will be seen as a value add to the economies, not only in South Africa, but in the South African region.
Okay. I guess also time will tell in terms of being able to evaluate the performance of this new company and its ability to reach out on its targets. We give it the grace to show itself for what it does believe it's worth. But Diana, I want to circle back to the point that Kola made in terms of putting money in what some people still term as baseload and necessary energy sources in the transition. And I speak specifically from a South African context of coal. Our Minister of Minerals and Resources, quite an adamant fan of continuing the financing, the support of the coal industry while we do transition into a renewable path. That's not always popular amongst private corridors, particularly the corridors of private financiers. Can you tell us why?
Look, I think, as mentioned, Nedbank is really has positioned itself very well as a market leader in the green space, in clean energy. We've been funding this for over a decade now, so it's not just a flash in the pan. Being a market leader in this space for a long time, and we've seen the value chain and the growth opportunities in the space. As such, I think for us as a bank, we will probably step back from funding coal plants going forward. Having said that, it is a transition, and I think we have acknowledgement for the fact that across Africa, things don't happen overnight, and we also have a pathway built into our energy policy that will steer us over time in a sensible, rational way towards a clean future. So I think that's where our focus will be. At the same time, this is not just a story of renewable energy. It is a story of transmission infrastructure. It is the entire ecosystem that one needs to think about. If you think about a tree, it doesn't sit on its own. It sits with birds nesting, with bees attracted to the flowers, and animals under the shade. This is the sort of ecosystem that you need to think about as an energy sector, and it can only survive and thrive if all those bits and pieces come together and is allowed to grow going forward. So I think that's really our focus, is to try and really drive the clean energy agenda, at the same time acknowledging that Africa is on a transition path that will take time to get it to a purely clean future.
So Kola, I suppose it brings it back to square one for you in hearing that quite a number of players are focusing on the future, and I suppose rightly so, to ensure that the continent is well positioned for this future economy that we're going through. But it does continue to leave us, or perhaps you, with the same question and the same challenge as to who is helping to support the old to get to the new. In the absence of perhaps players like a Nedbank who are positioning themselves for the future while also acknowledging what is happening presently, where else do you think the appetite for financing areas such as coal could potentially come from in this climate?
Let me say this, and it's very, very important. As an African, we all have our commitment to the survival of this continent and its people. We have everything it takes to be prosperous and successful, but African leadership needs to take ownership of directions and directives that will make us prosper. Number one, if you look at it, we are starting from a disadvantaged position. The first world, the OECD countries, have gone through their first, second, third, and fourth industrial revolution, but Africa is yet to embark on its first. So we should not be starting off the same starting block. An example in point is what just happened with Russia and Ukraine. And what did the European countries do? They went back to firing up the coal plants again. So we need to first take cognizance in African leadership that Africa's energy sufficiency first, because that is critical in whatever position. And that is why my focus and advice to African leadership and countries is our transition fuels, our transition sources should be a core position in whichever way sovereign states can find the capital to make sure, be it the coal plants should be fired up again in the transition and a determined date of exit to more greener fuels. And that is why countries like Nigeria, most countries in West Africa, the real focus is going to be on its gas fuels, in making sure gas processing, gas transmission is working in play for industrial growth, industrial output, power, so that way these economies can grow and our people could earn decent wages in the job creativity that supports every ever growing economy, in supporting that first industrial revolution that Africa so begs to have.
Mm-hmm. I put it back to you, Kola, in asking, I think we have to be cognizant of the fact that a lot of these the private financiers accountable to shareholders have also got lending mandates that need to adhere to global ESG standards. And I just wonder, and put it back to you, that in the absence that they are constrained by their mandates because of the accountability to their shareholders, what then do governments have by way of an option of plan B with financing? I mean, are we talking about maybe more innovative forms of financing tools? Jan had mentioned the increased presence of development finance institutions in the space. I mean, could institutions like that potentially be tapped into to plug the gap? And what would the governments also need to do themselves to ensure that the money does find these investment opportunities attractive?
Look, one thing is clear. I think African leadership needs to go back to innovative type structures that will support. The plus sign on the continent is, I go back, African financial institutions today compared to 10, 15, 20 years ago have come of age, that their single obligor limits is now sizable sums that could really move the dial. So if you look at a typical Nigerian bank, the top tier, you're talking single obligor limits north of $250 million. Now, that's a tidy sum with the support of government to energize and support institutions like that. They can then point this required capital to the transition fuels. I would say the same in South Africa. Look, South Africa, like every other country, has gone through its rungs around energy, but you've got coal. You just seen an example of what happened in Europe. They opened up the coal plants, but yet because of exigencies in globalization, we are closing or you're shutting down your coal plants. I think government needs to take a second look in looking for a required type of capital that will be directed at those coal plants, open them up, get them working again till the determined factor is put in place for your transition to sustained carbon-free type energy mix.
Sure. I think that this is certainly an ongoing conversation, and not to get stuck in this corner, although also not to water down its importance. I'd like to maybe take a step back and speak broadly once again about the energy landscape and the kind of projects that are being financed right now and the kind of terms that they are meeting to enable capital to feel comfortable in financing them. And Jan, this is where I want to bring you back in with the scope and the focus of Nedbank right now and other players such as yours in the private space. In your eyes, what factors do make an energy project investable?
It's a complicated question, Fifi, but a really important one. I think in South Africa, we've shown that, the banks have really gotten their heads around how to finance this. As I mentioned, very large figures for us. We have multiple international clients, Nedbank, and local clients now that have come back from multiple rounds of financing over a lengthy period of time. So I think we've cracked the code to really understand this sector now as South Africans, and this will certainly spill into the region, and it's already doing so. To give you a sense, I think the regulatory environment in South Africa is predictable. There has been some bumps in the road, but I think generally speaking, people are really happy and understand there's transparency, to use Kola's term earlier, really important. People can understand the regulatory system, and it is predictable. This is a long-term game, and certainly at Nedbank, we also take a very long-term view in where we want to go and what does that mean for sort of our immediate investments. So I think the regulatory certainty and policy clarity is really, really important to try and create this enabling environment. It's an overused term, but it's for a reason. I think that is a really important piece of the puzzle, to have just clarity that allows investors to be able to see and understand those risks, and allow banks to come in and provide the necessary leverage in these projects.
Kola, I imagine that the same sentiments would be shared by yourself. I mean, you even at the start spoke about the importance of leadership and policy. But is there anything that you'd add to your boxes that are required to be ticked?
There is a consistent pocket of capital on the continent, in all 53, 54 countries on the continent. And that's abundant pension capital that's saved in these countries. If government's directives to pour a portion of that capital towards this sector, it would go a long way, because then it assures global investors that government is putting money into the sector and is consistent. The biggest problem has always been the inconsistency from government in trying to fund the sector. If you look at majority of countries, regulations is now clear. Dimension in the sector is now clear. And the importance of energy mix and energy efficiency to the value as a value driver to all our separate economies is very clear. So everything works. But government leadership and ability to raise in adequate financing and making it work, coupled with African banks that have come of age, the difference would always work.
Mm-hmm. I think that in South Africa, we had recent changes in regulation that actually opened up pension fund money to investing in areas such as infrastructure, which of course, by way extend to energy. Jan, you'll correct me here if I'm wrong, but I also want to add another element into the mix, because what we have seen in the wake of the transition are different kind of tools that have come to market for investors to dabble in. Carbon markets, green bonds. We did mention blended finance, but perhaps I'll stick to the latter two. And I'm wondering, in your view, Jan, from what you have seen with some of these more innovative financing methods, are they working? Which ones, in your view, perhaps are achieving the greater success in trying to achieve the overall end game?
Well, I want to echo the point made earlier around capital markets, perhaps firstly. I think the part of the success story in South Africa, a big part has been the fact that banks and investors are able to recycle their capital. And this is really, really important, that you have institutional investors, pension funds, etc., that are willing to invest in the sector, understand the sector, and that allows people to recycle their money. A bank is only as good as its ability to be able to sell its investments so that it can take that money back and put it into a new project. And that has certainly been a success story, and also speaks to Nedbank's ability to be able to continue to invest at scale, is its ability to recycle money into that capital markets. This is very shallow in many African markets and requires a lot of work. I do think there's a lot of focus from also the DFI community to try and develop and underpin capital market development. In the South African case, to answer your question, I think we can say that green bonds have certainly worked. Nedbank's been a pioneer in green bond issues on the JSE, so that is coming of age. There are sustainability-linked instruments which we've issued successfully, but probably the biggest elephant in the room is that ability to recycle the capital into the institutional space at scale. I was last week at a conference, the Mission 300 initiative in London, led by the World Bank and the African Development Bank, where they want to supercharge their guarantees into the continent to try and connect another 300 million Africans over the next 5 years. Very ambitious, but it was encouraging to see a lot of conversations around capital market development, a lot of conversations around guarantees, risk sharing, which is really these partnerships that I think are going to be crucial, both for investors and banks going forward, to try and unlock more financing and more opportunity.
Before we get to the ingredients that make for a successful partnership, I actually do want to pick up on the point that you have made, bringing in some of the work that multilateral institutions like the World Bank are doing. I mean, we've also seen other foreign entities, in fact, countries are specifically offering donations. In some cases, there has been loans towards certain countries in the continent and towards enabling them in their energy security and energy transition. South Africa, a case in point, with the JET-P partnership that we have. And Kola, I'd like your thoughts here, because I mean, on one hand, you hear the support, financial support from foreign entities. You even hear it in conversations around, COP the times, whereby you have some Western countries taking accountability for the fact that they do need to pay up a lot more in terms of their share in the whole global climate conversation. So that's a great thing on the other hand. But on the other side of that coin, one has to wonder whether we are too dependent on foreign money for our energy security. And would you say that that's the case?
I think that's the case. We're too dependent. Look, let's put this. There is availability of capital looking for returns globally. The problem is what Jan said. That capital wants to be in a safe place that will make effective return to its shareholders, be it banks, be it whatever instruments. So what Light of Mission 300 and the World Bank, African Development Bank is, we need to come together and canvas to have a secured structure that gives protection to investors or potential investors looking at this space in our continent, trying to connect 300 million other Africans onto grids. It's important. But we must look at it that leadership in the separate African nations has to take a leading role. You've got to lead by example. We cannot wait for sustenance. We cannot wait for donations, because the restless youthfulness on the continent is not going to wait. So all this has got to meet together in trying to make sure both private and public capital comes to play, and also the international donors and the international global community, who means well in trying to support the sector, also has a path going forward. I think it's always good to speak with one voice, because it's shared responsibility and we all have the same problems.
Absolutely. Absolutely. We are fast running out of time, and I know I said I would get to the point around the ingredients that make successful partnerships. Perhaps it's a point that you can also respond to in your last comment. Although I think that in part, both of you have answered it higher up in the conversation. You spoke about policy certainty. Obviously, the risk-return profile needs to make sense, and an enabling environment. I guess the parting shot that I have for both of you, Jan and Kola, is if you could unlock just one barrier to accelerating energy finance in Africa over the next 12 months, just one barrier, what would it be and why? Jan, I'll begin with you.
Thanks, Fifi. I think I'll revert back to the policy point, but perhaps in more practical terms. We are really excited about Southern Africa. We think we are on the cusp of a potential golden age for the entire region, with energy sector starting to open up, energy trading starting to happen cross borders, regulatory environments are starting to merge. And we think that's really exciting, where it's not just the case of the DFIs will play their role, the financials will play their role, but creating that environment and that resilience across an entire region. And sort of creating not only an economic sort of convergence, but sort of a political convergence potentially, where you have a vision of being able to move power around the entire region to where it is most needed. That's where your synergies really come in. That's where your price competition comes in, and where you build real resilience, not only in the energy sector, but hopefully in those economies. And that comes back to sort of getting policy, regulatory environments closer together. And it feels like this is an opportunity, especially for the likes of a Nedbank, to really jump on this journey and be part of that. And hopefully we'll see the results of that over the next 5 to 10 years, where we have sort of a wholesale electricity system across the entire region, and convergence in the policy application.
With more people plugged into power, I'm sure. Kola, your one barrier unlock that you reckon could be a game changer to powering the continent and powering the finance behind it, of course.
Simplify our energy mix and regionalize the energy construct. West African power pool, the West African gas pipeline. Nigeria is blessed with huge gas reserves, monetizing, processing, and building that network that will feed the entire West Africa line, that would help energize the system, build those economies, and make them sustainable in itself.
Fantastic, gentlemen. A long way to go, no doubt, but certainly the views that you have shared have and will be quite important in the journey ahead. But that is where we're going to have to wrap it. Thanks so much for your time. I was joined by Jan Malan, UK Head of Power and Generation over at Nedbank Corporate and Investment Banking, as well as Kola Karim, Group Managing Director and CEO of Shoreline Energy International. Bringing to an end this week's episode, of course, of Energy Bridge Africa. From myself, Fifi Peters, it's bye for now.